Today I am going to take income and expenditure account chapter 1 Cbse syllabus in accountancy. What do you mean by income and expenditure account? I had already explained income and expenditure account. It is to be prepared in the case of not-for-profit organization. It is akin to profit and loss account. The purpose of income and expenditure is to find out whether the income is sufficient to meet out the day-to-day expenditures. We have to find out only surplus or deficit in case of income and expenditure account. So it is like a profit and loss account, and then it has two sides. One is expenditure side and then income side. The debit side is expenditure side, credit side is income side. So it is a type of nominal account. According to nominal account, debit all expenses and losses, credit all incomes and gains. So here the debit side, it contains all expenditure, revenue expenditure. Credit side, it contains only revenue receipts. So the revenue items, what do you mean by revenue items? Revenue item means all transaction incurred for the particular year, for 12 months period expenditure. For example, if we say salary, we have to take into account the salary for 12 months, rent 12 months. So we have to take all either expenses or receipts, we have to take for 12 months. So revenue items only we should take in income and expenditure account. And then the purpose of income and expenditure is to prepare the surplus or deficit in order to meet out the day-to-day expenditures. Whether the income is sufficient or not, we have to calculate here. And then expenses debit side and then income credit side, just I have told. And then it is to be prepared. On what basis it is to be prepared? Because in receipts and payments account, in exam, the receipts and payments account will be given in the exam, on the basis of which you have to prepare income and expenditure account. I had already deeply explained about receipts and payments account. It is a receipts and payments of cash receipts or cash payments. So it includes all transaction. So from the transaction we have to bifurcate, and then we have to produce in income and expenditure account. So to be prepared with the help of receipts and payments account. So whatever the expenditure mentioned in payment side of receipts and payment account, whether it is to be appeared in income and expenditure account, we have to select it. In case of receipts also we have to think like that. And then apart from that, we have to make some adjustments. What I told, I had already told, just it is a revenue items, all expenditure, all income must be for 12 months. For example, salary paid for 10 months, 2 months outstanding salary. So we have to show for 2 months also, because we have to show all expenses for 12 months. So add outstanding salary. So we have to mention in income and expenditure account. Like the prepaid expenses, if any payment paid for the next year, it has to be deducted, because we should show only for 12 months, not for 15 months or 6 months, 16 months. So we have to deduct prepaid expenses. And then depreciation. These are the non-cash items. It will not be appearing in receipts and payments account. So though it is not, these are not appearing in receipts and payments account, it has to be appeared in the income and expenditure account. So outstanding expenses, in case of outstanding expenses we have to add to the respective account, and then in case of prepaid expenses we have to deduct from the respective account. And then depreciation, we have to calculate if the capital receipt, I mean if the fixed assets is given, on that basis the depreciation rate will be given. On that basis we have to calculate the depreciation, and we have to mention in the debit side of the income and expenditure account. So what are the steps? The receipts and payments is given. From the receipt and payments you are asked to prepare income and expenditure account. What are the steps? It is a simple steps. First, The steps in preparing income and expenditure account. The first step you have to pursue receipts and payments account deeply and thoroughly. You have to consider each and every transaction mentioned in receipt side and payment side both. So first you have to concentrate receipts and payments account, and then we had already explained about the difference between income and expenditure account, receipts and payments account. In receipts and payment account there will be opening and closing balances. In income and expenditure account there will not be any opening or closing. So from receipts and payments account you have to exclude the opening and closing cash balance and bank balance. Understand? The first step you have to consider, you have to exclude the opening and closing balance of cash balance and bank balance. Understand? And then income and expenditure, what I told, it should appear only revenue items. It should not include capital nature. So if there is any capital in receipts and payments account, the purchase of machinery, purchase of building, purchase of land, like that, or any loan obtained, and then is there any capital receipts or any capital receipts or capital payments? So both should be excluded. Here capital receipts means what? Any loan obtained, any subsidy, any government grants, like that, it should be appeared as a liability. But capital payments mean purchase of machinery, land, building, like that. So these are the transactions will be in the income, receipts and payments account. You should exclude these two items, capital receipts and capital payments. Understand? And then you have to consider only revenue receipts. Revenue receipts, which side is the revenue side? In income and expenditure account? Income and expenditure account, the credit side is the income side. But here, debit side is the receipt side, in receipts and payments account. You have to consider the debit side of the cash book, I mean revenue receipts. It should be appear in the credit side of income and expenditure account, and then some adjustments is to be made. For example, commission or rent received, it is an income. So accrued income, is there any accrued income? We have to add and the credit side. So consider only revenue receipts, not capital receipts, only revenue receipts. This is an important point. And then take revenue expenses to expenditure side. The revenue expenditures and all other capital expenditure will be in the credit side of cash book, I mean receipts and payments account. From that we have to take. So only revenue expenses we have to take. As far as income and expenditure account, we have to take only revenue expenditures, on which also we have to take some, is there any adjustments? For example, outstanding salary, for example, prepaid expenses, prepaid rent. So this has to be adjusted in the debit side of the income and expenditure account. Understand? And then consider the following items not appearing in receipts and payments account. Not appearing. Some items will not be appearing in the receipts and payments account. Depreciation, because it is a non-cash items. And then provision for doubtful debts, it is also not appearing in the receipts and payments account. And profit or loss on sale of fixed assets. We have to ascertain this. So these items, depreciation should be added in the income and expenditure account, provision for doubtful debts should be added in the income and expenditure account, and then only if it is a capital receipt or capital payments. So either profit or loss on sale of fixed assets. For example, car costing about rupees 5 lakhs. 5 lakhs car has been sold for 4 lakhs rupees. So there will be a loss. How much? 1 lakh rupees loss. Which side it will be coming in the income and expenditure account? If it is a profit, it will be in the credit side. If it is a loss, it will be in the debit side. So either there is a profit or loss on sale of fixed assets, it will have to appear either debit side or credit side of income and expenditure account. Clear? Let's see the distinction between income and expenditure account and receipts and payments account. Both we have already explained. Anyhow, please keep in mind the important difference between these two. The first difference is the nature. On the basis of nature, it is like a profit and loss account. It is as same as profit and loss account. So both are same. Income and expenditure and profit and loss account both are same. But income and expenditure is to be prepared in not for profit organization. Profit and loss account is to be prepared in trading concern. Understand? This is a difference. As far as receipts and payments account, it is nothing but cash book. Understand? It is nothing but cash book. The receipts and payments of cash. And then nature of items. Nature of item means it records only revenue nature. I had already explained it is for only 12 months period. Whether it is an expenditure or income, it must be taken into account for 12 months. Understand? So, revenue nature. But as far as receipts and payments account concerned, it records revenue as well as capital. Understand? Capital nature means capital payments. What is capital? What will be the capital payments? Just I told. Purchase of machinery, purchase of land, purchase of building. And then what will be the capital receipt?
Sales on machine.
Sale of machinery, and then subsidy, government grants, like that. So whatever receipt we are receiving in terms of cash, that is irrespective of whether it is a revenue nature or capital nature, all must be entered in the receipts and payments account. And then period. Income and expenditure, it must relate all transaction mentioned in income and expenditure must relate only to the current period. We should not enter the transaction relating to preceding and succeeding period. We should enter only the transaction to the current period. Be careful in income and expenditure account. But in receipts and payments account, it may relate to preceding or succeeding periods. Because it is a cash book, nothing but it is a receipts and payments account is a cash book. We can enter either receipts or payments both for the period, previous period or next period, whether it is expenditure or income. So it may relate to the preceding and succeeding periods. And then income and expenditure account, the debit side, actually income and expenditure is a nominal nature. So debit all expenses and losses. So the debit side will be only expenses and losses. But cash book, debit what comes in? Actually it records only cash receipts. It is a receipt side. Actually debit side is a receipt side. Here debit side is a expenditure side. And then credit side. Credit side is, in as far as income and expenditure account, credit side is income side, and then incomes and gains will be entered in the credit side of income and expenditure account. In receipts and payments account, only payments. Only payments. Payments means it may be revenue or capital nature. Understand? It may enter. And then depreciation. Other non-cash items. Actually, in case of income and expenditure account, it includes depreciation. Whereas in receipts and payments account, it does not include depreciation because it is a non-cash item. It must not be appeared. Understand? And then opening balance. There will not be any opening balance in the income and expenditure account. There is no opening balance. Understand? Because it is a revenue nature. Only expenditure and the incomes will be entered. No opening balance. Understand? Here there is a opening balance. Either cash opening balance or bank opening balance. It will be entered in the debit side of receipts and payments account. If it is overdraft, it will be entered in the credit side of receipts and payments account. So there will be opening balance here. And then closing balance. Closing balance, as far as income and expenditure account is concerned, the purpose is we have to find out whether surplus or surplus. Actually, surplus or deficit. Surplus means what? Excess of income over expenditure account. So, in income and expenditure account, the closing balance will be either surplus or deficit. Understand? You may enter here deficit, excess. deficit. But in case of receipts and payments account, the closing balance will be the closing cash in hand or closing cash at bank, or in some cases there may be bank overdraft. If it is bank overdraft, it will be coming in the debit side of receipts and payments account. If the closing balance, it will be coming in the credit side of receipts and payments account. This is the main difference. Be careful.
Now, let me solve illustration 3. From the following receipts and payments account for the year ending 31st March 2015 of Negi's Club, prepare income and expenditure account for the same period. Here, receipts and payments account for the year ending 31st March 2015 is given. Please listen, there is a mistake in the question itself. Receipts and payments means the debit side is the receipt side, payment side is a credit side. Here it has been wrongly typed. So please make it correct. There is no expenditure, it is receipts. This is debit side is a receipt side. Write it down, receipts, and then income side, that is expenditure side. Credit side is a expenditure side, debit side is a receipt side. Please make it correct. And then we have to analyze each and every transaction carefully as per our steps. Actually, we have already given the important steps. The opening balance and closing balance must be excluded to prepare income and expenditure account. So the opening balance 25,000 rupees bank balance, it should be excluded. And then closing balance, cash 300 rupees, bank 20,400 rupees, it has also to be excluded. And then we will concentrate only on the receipt side. So the receipt side is the debit side in receipts and payments account. These transactions will be coming in the credit side of income and expenditure account. Understand? So subscription is given for the period 2013 to 1,500, 2014 10,000, 2015 500. But we have to take into account only revenue nature. So 2014 we are preparing for the year ended 31st March 2014-15. So 2014 10,000 rupees we have to take into account. Understand? Is there any adjustment mentioned in the below? It has to be adjusted. We will see one by one. And then donation is also coming in the credit side of income and expenditure account. Hall rent, it's also coming in the credit side. And then interest on bank deposit, it is also a receipt, and entrance fees. All these items will be appearing in the credit side of income and expenditure account. And then debit side, payment side. These payment side transactions will be coming in the debit side of income and expenditure account. Here we had already explained, if it is a capital nature, it must be excluded. So for purchase of furniture, it must be excluded because it is a capital nature. But at the same time, we have to provide depreciation. If it is mentioned the depreciation percentage below, we have to take into account depreciation. And then salary will be debit side, telephone expenses will be debit side, electricity charges will be debit, and then postage, stationery, debit, up to postage and stationery. Purchase of book, it is an asset. Book means here it is an asset. So we should not take, it should be excluded. And then entertainment fees, 900 rupees. So it will be taken. And then purchase of 5% government papers, it is investment in government securities. Investment in government securities is an asset. So it must be excluded. So you is not take, but at the same time, if there is interest, it should be taken. Understand? And then miscellaneous receipts, 600 rupees, it is a receipt, it is also taken in the credit side. So what are the adjustments? We have to see one by one. Salary outstanding. So for salary there is an outstanding. So we have to add this 1,500 to the salaries account in income and expenditure account debit side. And then entertainment expenses outstanding. How much entertainment expenses? Entertainment expenses, how much is given in 900 rupees. So 900 rupees at the same time outstanding. So we have to add 500 rupees. And then bank interest receivable. Bank interest on bank deposit 450. Apart from that, one interest receivable. So it has to be accrued interest. It has to be added in the credit side. And then subscriptions accrued. Actual subscription how much? The subscription 10,000 rupees. 10,000 rupees for 2014. Apart from that, there is a outstanding subscription. Subscription accrued. So 400 rupees should be added. So 10,400 rupees. And then 50% of entrance fees to be capitalized. If it is mentioned about the capitalization, we have to take only the revenue nature in case of income and expenditure account. So entrance fees how much? Entrance fees 1,000 rupees. So 50% should be capitalized means the 500 rupees or 50% of 1,000, that is 500, should be capitalized means the entrance fee should go to liability sides 500 and then remaining 500 rupees to go to income and expenditure account. Understand? So furniture is to be depreciated at 10% per annum. How? Actually furniture purchased when we purchased on 1/7/2014 we purchased. Furniture purchased 1/7/2014. Understand? So how many months? 7, 8, 9, 10, 11, 12 and then January, February, March. So 9 months depreciation we have to provide at 10%. So let us prepare the income and expenditure account. Income and expenditure account for the year ending 31st March 2015. Debit side is a expenditure side, income is a credit side. So we will take expenses first. Salaries. Is there salaries any adjustment? Yes, salary 2,000 rupees. Salary 2,000 rupees. Outstanding salary is 1,500. So total salary will be 3,500. And then telephone expenses 300 rupees. There is no adjustment. So we will take the net figure 300 rupees. And then electricity charges 300 rupees. 600 rupees electricity charges. There is no adjustment. So we will take the full amount electricity charges 600 rupees. And then postages and stationery. Postages and stationery 150 rupees. There is no adjustment. And then entertainment expenses rupees 900. There is an outstanding 500 rupees. So we have to add. So 900 plus 500, 1,400 rupees. And then miscellaneous expenses, because the purchase of 5% government bonds will not be taken. Miscellaneous expenses rupees 600. So miscellaneous receipt 600 rupees full amount we will take. So miscellaneous expenses 600. Depreciation we have to provide. Depreciation at 10% on 5,000 rupees for 9 months. So 5,000 into, here you have to write 5,000 into 10 by 100 into 9 by 12. It will come around 375 rupees. So the debit side is over and then look into the credit side. So what will be the receipts? You have to see, go back to the receipts and payments account. There is a subscription. Subscription we have to take only for the current period. So we are preparing 2014-15. So 2014 amount is given 10,000 rupees you have to take. So subscription amount 10,000 rupees. It has some adjustments. Subscription accrued, that is outstanding. So it should be added. So 10,000 into 400. So 10,400. And then donation rupees 2,000. Straight away you can put it. And then hall rent, it is also income 300 rupees. Hall rent 300 rupees. And then interest on bank deposits. Apart from interest on bank deposit, there is an adjustment In bank interest receivable, outstanding, I mean accrued interest 150. So as per the receipts and payments account, the bank interest 450 and then outstanding interest 150. If we add 600 rupees, and then interest on investment. Please go back to receipts and payments account. In the payment side, there is a transaction, purchase of 5% government papers. Actually, the purchase has been made on 1/7/2014. The amount, investment amount is 8,000 rupees. So 5% interest, it is a income. It should be also shown in the credit side of income and expenditure account. So we have to calculate 5% for how many months we have to calculate? Actually we purchased on 1/7/2014. So July, August, September, October, November, December, January, February, March. For 9 months at 5% interest we have to calculate. It is a income. It is a outstanding income. We have to receive this income. So 8,000 into 5 by 100 into 9 by 12 for 9 months we are preparing. So it will come around 300 rupees. But it is wrongly mentioned as 200 rupees. So make it clear, make it correct. Interest on investment. Interest on investment rupees 300. If we make it change here, the total will be also changing. The credit side total will be 14,100. The credit side total will be 14,100. And then the same amount will be transferred to the debit side total, that is 14,100. Now if we balance, the surplus, that is excess of income over expenditure, will be 7,175. 7,100. Please make it correct. Some printing mistake is there. Don't worry about it. Understand?